Well, the big stock in focus will be Tata Motors, which reported what was a dismal quarter just in the last hour of trade yesterday. Sonia is here with the details. She had a busy evening listening into the conference call, which was quite alive as well. Sonia, take it away.
Well, I expect the stock to perhaps be under more pressure today. That's because the numbers were very weak from all quarters. It was a 6-year low that the Jaguar Land Rover margins hit this time around. And, the JLR margins were down 510 basis points on a year-on-year basis. Now, it's really the Forex hedging losses that have really impacted the earnings this time around. And that was the key talking point in the conference call as well. The management, though, has given a couple of reasons why the numbers were weak this time. Lower wholesale volumes and a weaker product mix, higher new model launch costs, unfavorable variable marketing expenses, and a biennial pay negotiation that the company had to incur. But more important was the commentary of the management in the conference call yesterday. They said that the hedging losses that they've seen this quarter will continue for another 2 to 4 quarters. So, there could be another 4 quarters of pain that they could see because of hedging losses. Also, they said that there are a lot of demand pressures, especially in some of the key markets like North America. Remember, North America has been growing in excess of 30%, but they now see softening demand over there. And because of that, they have to give higher incentives, higher discounts, and that really has impacted their profitability as well. Also, on their margin guidance of 14 to 16% for Jaguar Land Rover, they said now that's a medium-term goal and not a near-term goal. CLSA, in fact, has downgraded the stock to a sell from a buy. The target price has been lowered to 405 versus 650 earlier, and the Tata Motors ADR was under a lot of pressure as well. So I won't be surprised to see, some more pressure on the stock. Also, more importantly, Rakesh Jhunjhunwala, who's a big holder in the Tata Motors stock, questioned the management yesterday about the hedging losses, and he did say that why is it that because the pound has fallen, so that should actually be good for you. Why is it that you're predicting hedging losses for another 4 to 6 quarters, or rather 2 to 4 quarters? So they said that's just our hedging policy. We can't do anything about that. I mean, we couldn't predict that the pound is going to fall so much, but that was a key talking point that forex losses could continue. And in fact, a lot of brokerages point out that the worsening product mix is something that will be a new norm. So now they are selling more amount of cheaper Jags, people preferring to buy cheaper products like the Jaguar XF, XJ, and not too many people buying the expensive Land Rover. So that's why their blended margins have fallen. So all in all, weak numbers could see some more pressure.